Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. Listen, today we got a good one. Today I'm going to walk you all through different financial statements that are going to help you make better decisions about getting into long-term plays like leaps and just smooth equity plays, right? So without further ado, well, actually, before we jump into it, like, subscribe, share. If you're new, welcome to the channel. I appreciate you all. I mean, the channel is growing. It seems like we've just been on a tear ever since we crossed 1,000. So I'm really excited about the growth of the channel and everybody, and I'm hopefully providing the value that you all need. Again, all the questions that you guys post in the comments, I see them. I try to go and make videos about the things that you may not understand, but the whole point of this channel is to educate you in stocks and investing in the form of options and long-term trades, right? So let's jump right into it right now. A lot of people might be like, I don't have a financial background. That's something that I hear so much from people. It's just like, I want to invest, I want to trade, but I don't have a financial background. And I'm here to tell you the good news. Like, you really don't need one. I happen to have one, but it doesn't necessarily make me the best trader because I had a financial background. Like, there are plenty of people with absolutely no background that made it, right? So I'm going to show you, I'm going to break it down for you, like the things that you need to understand, because a lot of this stuff is jargon, right? A lot of industries is just jargon. It's really just understanding the language, because it's something that is like a barrier to keep people out, right? When something has a bit of a difficulty to it, it tends to allow for a small group of people to get rich and the masses to not benefit from it because of that barrier. So I'm trying to break it down, make it as simple as possible, but I also want you to commit to pushing a little bit harder, working a little bit harder to get past that barrier. So when you're studying and it feels a little uncomfortable, keep going. When you read and it feels a little uncomfortable, keep going. If something feels like Chinese or something that you just do not understand, keep going. All right. So we're going to jump right into it. Now, the 3 financial statements that you need to concern yourself with are the income statement, which is also called the P&L. You probably hear that more often than not, right? Then there's also the balance sheet, right? And then there is the cash flow statement. Now, the income statement, this is just pretty much showing a company's revenue over a given period of time and how much money they were able to keep, right? So over the period of a year, 2 years, a lot of times on the statements, you'll see 3 to 5 years quoted on the statement, and this is showing you how that company performed, year over year, month over month, right? It's really important. So some things that you're going to see on the income statement are revenue, right? You're going to, that revenue is going to be subtracted from something that's called cost of goods sold. This is anything that contributes to selling the product, right? Then, just below that, you're going to start seeing things like operating expenses, like something that's not so closely related to the actual sale, but it is, related to the operations, like, like keeping the lights on, wages, labor, things like that, right? So then you're going to take the revenue, you're going to deduct those, cost of goods sold. Then you're going to deduct the labor, right? You're going to deduct the overhead. You're going to deduct anything that helps you operate the company. And then that's going to put you at your net profit before tax, right? And then we only got one more line after that. And that's, whatever the tax is for that particular income bracket. And then you get the net profit after taxes, right? This is really important. Again, I'll break it down in an example and show you how this makes a difference in a company, why it makes a difference, and how to decipher whether a company is doing well or not. The next, you have the balance sheet, right? The balance sheet is giving you guys an understanding of where a company is in a given moment, right? This is what you see often, right? Assets and liabilities, right? It's a simple formula. Assets equals liabilities plus equity, right? So it's like what you owe versus what you actually own. So that equity could be in the form of a building. It could be in the form of inventory. It can be in the form of equipment, right? And those liabilities can be in the form of payables, like things that you owe people, you know, a note on something, right? Anything that is a liability, it could be a loan, anything that you have to repay is a liability. So when those two things come together, that gives you, where you are in a given time, the worth of that company in a given time. Last but not least, we have the cash flow statement, right? The cash flow statement is actually pretty similar to the income statement because it's pulling a lot of things from the income statement, right? But it's slightly different because the income on the cash flow statement is only dealing with actual cash, like actual money that changes hand, right? We're not talking about which we would call accounts receivables, which is money that's owed. The income statement will account for that in the revenue, right? It'll calculate money that's owed to you in addition to the actual money that came through. But the cash flow statement is only dealing with actual cash that comes through, right? And the cash flow statement is a really interesting thing to just kind of like understand where a company is and where they place their values, because this is where all the streams of income are coming through, right? So you got the revenue from the actual product. Then you have, the revenue from any sort of like financing or something like that, right? Then you have revenue from any sort of investing that you may have done, right? A lot of companies you'll see, like Nvidia in particular, you'll see that they buy stocks in a lot of companies that are in a sector that is closely related to theirs or directly related to theirs, right? So when a company, gets, really big and they have a lot of profits, they need to find somewhere to like park those profits and create an income, right? Now I'm talking to y'all small business owners. This is something that y'all need to consider. I say this all the time. A lot of times when you're a small business owner, you think that you don't have money to do anything, but you can actually create another revenue stream from some of those reserves that you have from the profit that you take per year, right? I know everybody's like in a chase to try to like not pay taxes at all, but you do want to start creating investment opportunities in your business. So that's another revenue stream that could eventually, save the day. Say there's some sort of downturn in the market. All right. I don't want to spend too much time on that rabbit hole, but those are the three income statements. And I want to give you an example in just a second. So let's run it right back. Okay. We have the income statement, which is also called profit and loss statement, right? P&L. You're going to hear that a lot. We got the balance sheet, right? This is the assets and the liabilities, right? This is how we determine the equity, right? The assets and the liabilities, like assets minus liabilities. What do you own versus what do you owe? And that's your equity position. Okay, then we have the cash flow statement, which again is just showing the various ways that you make income in the business, and it's only accounting for the actual cash, not accruals, which is things that are accruing that are owed to you, like accounts receivable. All right, so I hope that's clear, right? And don't get too bent out of shape about the words and stuff like that. Like, I'll make sure that I'm always breaking it down and explaining. So accounts receivable is simply just things that like money that is owed to you. So if you have an invoice out and then somebody has a net 30, which is them agreeing to pay you in 30 days, that is a accounts receivable, meaning that in 30 days you will be receiving that cash. So you will, account for it in the statement, but it may not actually come into the business until a little bit later. So it's important to, to understand that. All right. So now I'm just going to go ahead and pull up an example and just kind of like walk y'all through, right? So, the reason that this is important is because a lot of our opportunities come from stocks that may be down, right? A lot of times stocks are down and they provide an opportunity, for us to see what's going on. So I got Enphase pulled up right here. So a lot of times stocks are down, right? And they provide an opportunity for us to ride them up. But the only way that we really understand if it's worth it is if we understand how to read the financial statements. So if I see a stock like this, right, we got Enphase, which is down 6% on the day, but it's down over 90%, over the past couple of years. So, how do I distinguish between whether or not this company is getting beat up and it's about to be done, and it's just like beat up, but there's a reason behind it and there is a huge chance that it recovers, which creates our massive opportunity to make money? How do I determine that? It's by understanding the financial statements. So let's jump into the statements here on Enphase real quick, right? So I'm just gonna click on statements and then scroll down. And as you can see, right, look what we got. What did I talk about? Income statement, balance sheet, cash flow, right? So this income statement, balance sheet, and then a cash flow statement. All right, so we on the income statement. Now, the numbers that you want to focus on in the income statement are the revenue, right? Gross profit, and year over year growth, right? This is showing you like pre-taxes, right? This is pre-tax income. So this is before they throw that 8 million, 4 million, like before they get charged, an arm and a leg in each quarter. This is what they made up here, right? Revenue is important, obviously, because we want to know how much a company is making, right? That is the very first thing that's going to determine what they can afford and what position that they're in, right? But it's not just revenue alone, right? It's also gross profit. Like we want to know that, okay, after you sell your items, like you spend the money to actually get those things sold to bring the revenue in, cost of goods sold, right? How much are you making? Like, are you profitable? That's important, because if you're not profitable, that means that you owe people, right? That means that you're not solvent. That means that you can, you could possibly not be able to pay all your bills or have any money left over, which is profit, which is, used to build the company further, right? You build the company further with profit. So the more profitable a company is, like the better likelihood they have of, of growth in the long term. So when you look here, you see, they weren't doing so good in Q4 of 23, right? When you look at the revenue, Q1 24, they weren't doing so good. I'm sorry, Q1 of 24, Q2 of 24, and Q3 of 24, they weren't doing so good. They were in the red. But look what happens in Q4. The revenue goes up $382 million. Then another $356 million in Q1 25. Then it goes up again in Q2 of 25, right? And this is all beautiful growth. Look at this. This is showing year over year growth. So where they were last year, so 23, quarter four of 2023, they grew 26% from there. Where they were in Q1 of 2024, they grew 35% from there. And where they were June or Q2 of 2024, they grew almost 20% from there. So these are important numbers. Then you go and look and you see, look, not only did the revenue grow, but the gross profit grew. That's what you really want to see. I don't want to just see that your top line is increasing. I want to see that you're actually leaving with more money. The profit is what you're leaving with, right? And then, of course, you add in the operating expenses, like I mentioned earlier, and then this is giving you, a more of a true number of what the profit is, right? So this is showing after you pay for the cost of the goods, right? And then the operations of it. So just running the company, everybody that's involved, all the laborers, all the, your employees, your managers, all of that stuff. After all of them are paid, this is what's left over. And look at the growth from Q4 24, right? Look at the growth from Q4 24, and it's showing it a 1,300% growth from Q4 of 23. Almost a 1,300% growth from Q2 of 24, right? This is huge. Now, how is all this happening, with the stock so far down? Well, it's because a lot of times there's opportunities in the market that may be better, right? There may be companies that are in a sector that the public is more excited about. So more money is flowing into there. Institutions are flooding money into the things that are already working. And a lot of times there are good opportunities that get ignored, like Enphase is right here, right? So yeah, that's the income statement. Let's look at the balance sheet. Look at the balance sheet, right? So, Q3, Q4, good growth on the assets. Took a little bit of a hit in Q1 of 24 through 25. But a lot of times when you see a hit on the assets, a lot of times that could also mean that a company is leveraging those assets to go and build the company out further, right? There could have been a sale of a property, or So many different things that could have caused the assets to drop. Inventory could have been at a standstill because of some sort of supply chain issue or something like that, right? So there's so many different things that could cause that to change. Now, you look at the liabilities also went down too, so that's a good thing. It's not like it's inverted and we're seeing the assets went down, they got more liabilities. They remain pretty stable, right? So that's a good sign. Then we go to the cash flow statement, right? The cash flow from operating activities, right? So this is just like what they sell. Like if you're an energy company and you're selling like solar, this is what they made. So you look at these numbers in Q4 24, almost 400% growth. And they fell a little bit in Q1 of 25, fell a little bit in Q2 of 25, but we're just talking about year over year. It doesn't mean that this doesn't mean that they weren't profitable. It just means that it fell a little bit from the time before. But look at the cash from investing activities, right? So this company is planted in, quite a few assets, right? 600% growth. They took some time to start buying investments to help out with revenue, and it's definitely helped out tremendously. All right. So let's actually go to this on the charts. So this is down tremendously. I'm gonna take this ruler and just draw. This is down tremendously. Look at that. 90% is down. 90%. Right? So if we can get a break out of these, this downward channel and then start to make, our way up, I put it right here. You get rich in this area. In the $100 to $200 area, you will make almost 10 times your money if you're invested in Leaps or some other long-term options plays, right? I recommend Leaps out 2 years because it gives the market time to do what it needs to do. But this is not just random that I like this particular stock. It's because, again, those financial statements look good, right? We see growth in their operating income, the gross profit, the revenue, all the important parts of a income statement. We're seeing positivity. The net income after taxes grew 242%, right? Earnings per share is another important metric, which is just showing the profit that's available from that company per share that they have issued to the public, right? So when you see that type of growth, these are all positive things, right? So when I look at this, it just shows that there's just a tremendous opportunity for Enphase to get here whenever the technology sector rotation is over. So when we go to what we would call a bear market, that would be a really good time to to see growth there. So now, while nobody's really excited about it, is the time to get in. Also, if you look at the fear and greed index, we're creeping towards extreme fear, which is already a really good buying opportunity. We just had a crazy wipeout. Some people would say it's due to words that Donald Trump said, but it's also that a lot of those tech companies were already sitting at highs. They were already ready to come down. So it was just like the tipping point for that, right? So now we got fear in the market. We could come back next week and people could be even more fearful. That could push us to extreme greed. And then that's when we're going to see so many different opportunities coming available in various parts of the market. But like I said, an opportunity like Enphase, something that's already down 90% and has good financials, you can't go wrong. My rule of thumb is, 20 to 30% down, I'm already looking for Leaps. But something down 90% with growth in their revenue, growth in their net profit, might be something to consider. Now, this is not financial advice. All right, I'm just on here, sharing things that I think are pretty cool in the market, showing you guys how to navigate investing in stocks, but I'm no financial advisor. It's not financial advice. So definitely make sure that you go and do your own research. Listen, I appreciate everybody that comes to this channel and spends any of their precious time over here listening to me run my mouth. But my goal is to get you to that next level so that you can become a profitable trader. I hope that this video helped you just a little bit more along that journey. Okay. Now, if this video helps you, just go ahead and hit that subscribe button, right? It would mean a lot. If you got any questions, leave them in the comments. Get us a like. It really helps with the algorithm. I truly appreciate y'all. I'm going to see y'all in the next one. But look, you got to remember, invest smart, live free. I'll see you in the next one. Peace.